I would just add a thought experiment that investors can run is, what do you think Bitcoin's price is if the 10-year is at 3 and the DXY is at 94? Like, what do you think Bitcoin's price would be? When I run that thought experiment in my head, Bitcoin's price is substantially higher than it is today. And I think, as Matthew mentioned, the Trump administration has been extremely clear about what it wants. It tends to get what it wants. These are things that it wants. And so if we move in that direction, ask yourself, where is Bitcoin at that point in time? I certainly see it in the six figures. I see it at new all-time highs, substantially higher than we are today.
Well, I saw in one of your newsletters, you said you could see it hitting 200K this year.
100%. Yeah, absolutely.
Imagine a world where the 10-year Treasury yield drops to 3% and the dollar index retreats to 94. Now ask yourself, where would Bitcoin be trading? For savvy investors, this isn't just hypothetical, it's a looming reality. With the Trump administration aggressively pushing for lower rates and a weaker dollar, the macro winds are shifting in Bitcoin's favor. The result? A potential supercharge for crypto's flagship asset that could send it soaring past six figures faster than most expect. Matt Hougan, Chief Investment Officer at Bitwise, makes it clear, run this thought experiment, and Bitcoin's price isn't just higher, it's at new all-time highs. He points to the White House's clear agenda, weaker dollar, lower yields, as rocket fuel for Bitcoin's next leg up. And the numbers don't lie. If these policies take hold, 200,000 Bitcoin in 2025 isn't just possible, it's probable. The question isn't if Bitcoin breaks out, but when. With institutional demand heating up and macro conditions aligning, the stage is set for a historic rally. We will now bring you clips from Matt Hougan's explosive interview. Please don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
It's just an extraordinary moment to live in because, as you mentioned at the top, anything could change over the next hour or day. I think most crypto investors are separating into people-oriented short-term and people-oriented long-term. From a short-term perspective, the only thing you can count on in crypto right now is volatility. And so we're seeing a lot of interest in people trying to monetize that volatility as a short-term trade. In the long term, I think if you look at Bitcoin's performance and indeed some other crypto assets' performance, it's been actually very good. It's been very resilient. It's done better than in previous major market drawdowns over the last 10 years. And so I'm heartened from a long-term perspective, but we could absolutely wake up, down 5 or up 5 tomorrow. It's out of our control. So short-term, the play is volatility. Long-term, I think we're in a very bullish environment for crypto. And on a day-to-day basis, it's just exhausting to do so much work just to churn water and end up back where we started. I would just add, from my perspective, the investors I speak with and the people who I experiment with, thought wits in the crypto market, think that we're moving into a fundamental market where there is more differentiation between this project and that project than we perhaps had in the past. I think that's somewhat what Matthew is speaking towards. You can make a fundamental case for Hyperliquid. You can make a fundamental case for Bitcoin right now. You can make a fundamental case for certain DeFi protocols. And I think people are going to be focusing more on protocols and projects that are demonstrating fundamental traction. There are actually significant bull markets in parts of crypto right now from a fundamental use perspective, whether that's stablecoins at all-time high, whether that's real-world assets at all-time high, whether that's some of these derivative platforms at all-time highs. Those are really happening. And I think people are just focusing more on idiosyncratic fundamentals than this broad alt season risk on trade. I think that may not be a feature of the next year. I think it may be more idiosyncratic and fundamental than it has been in the past. I feel like crypto feels entitled to what it's had in previous cycles, which is you go into Bitcoin and then you rotate in ETH and then you move out the risk curve until we're all buying digital rocks and then we reset. And I just think the market has changed. That's true of an asset where the primary value is the speculative value, where the primary thing the asset class is talking about is what might happen 5, 10, 15, or 20 years in the future. In that world where the speculative premium is the dominant driver of returns, it makes sense just to roll out the risk curve. And what you buy is less important than its vol and its riskiness. But I think we're entering a world where crypto is driven more by fundamentals. And so you're going to see people picking apart different L1s. We actually saw that in 2024 and just no one talked about it, right? We saw Solana ripping and ETH falling. That wasn't a risk on, risk off trade. That was one L1 that was capturing real fundamental growth and another that was experiencing a fundamental decline. And we got very divergent returns. I think you're going to see that on each and every asset. I think that's going to be the defining feature of whatever this next cycle is a more fundamentally driven cycle with more differentiation between projects that are gaining traction and other projects that aren't, and less just sort of spray and pray allocation to risk on assets in general. I think Solana needs to recover from that only pumped up fund narrative and find other fundamental use cases and other fundamental traction. But when you look at, revenue versus market cap, it does look attractive, right, on a comparative basis. It's also fair to note that this criticism of it's only fun, it's only, absurd projects has been true of every technological revolution ever, right? The early days of the internet was not, people doing the majority of their work on that market. It was just a plaything. It was just a toy, maybe illicit activity. So I think people can look past that. But what I was driving at more was people are looking, past the broad narrative to what are we seeing from a revenue perspective? What are we seeing from a user adoption perspective? And that's going to determine where people allocate in the future more than sort of broad paintbrush did in the past. I mean, the 10-year Treasury market has been crazy. It's been bouncing around like a meme coin. From a yield perspective, it's been completely wild. I think what it's signaling to Bitcoin investors long-term are two things, which are almost go back to our short-term versus long-term perspective. So what it's signaling from a short-term perspective is that, whoa, things are changing. We don't know exactly how things are changing, but we know that things are changing. We know maybe that the world is losing its sort of appetite short-term for Treasury exposure as a safe haven asset. It's introducing, from a short-term perspective, volatility and risk into people's mind. And because Bitcoin has elements of being a risky asset, that's challenging to Bitcoin from a short-term perspective. I think from a long-term perspective, what we're seeing out of the moves in treasuries and in the dollar is that we're sort of moving to a new monetary order, to borrow Ray Dalio's term. And I think that's opening up a window for Bitcoin to get a major seat at the table. So from a long-term perspective, what I see is that market significantly expanding. Again, short term, it makes the market riskier, which causes Bitcoin to face headwinds. Long term, it's a resetting of the monetary order, which causes hard value, store value assets to increase. And I think raises the long-term price target that I and others have for Bitcoin. So it is a best of all worlds, worst of all worlds sort of situation, depending on your time preference.
The market split between traders chasing wild swings and believers betting on fundamentals. In the short term, brace for 5% daily moves. In the long term, real projects like Solana and Bitcoin are separating from speculative noise. We're diving into a new era where adoption and real revenue are smashing blind hype. Treasury chaos might be throwing punches now, but it's fueling crypto's rocket ship to the mainstream. You can play the volatility or build your positions, but this cycle favors real utility over empty promises. The game has totally shifted. If you're not adapting, you're falling behind. While debt crises and trade wars are shaking global markets, Bitcoin stands firm at $80,000, no revisiting old highs. This isn't 2020. A supply crisis of historic proportions is unfolding. ETFs, corporations, and soon governments are gobbling up Bitcoin faster than miners can produce it. The White House is actively weakening the dollar, and 95% of investors are still underexposed. The road to $200,000 is crystal clear. It's not a matter of if Bitcoin surges higher, it's a matter of when. Let's watch more clips from the interview.
From one perspective, the global economic world is ending and Bitcoin's at 80K. The last time this happened, we wicked down to $3,000 during COVID. So, we are in a different world. I do think there may be a substantial bottom in here. I think it's notable that we didn't retest the previous, all-time highs around 72. I see incredible strength when I look at the Bitcoin market in particular. I agree that Dalio is pointing towards a longer term thing. I think he's pointing towards a very real risk, right? Debt levels really are extraordinarily high. Deficit levels really are extraordinarily high. And if that continues, particularly with the increasingly divisive politics and geopolitics that we're facing, it doesn't end in a beautiful circumstance, right? It ends poorly. And I think a lot of people, in part for that reason, are looking for hedge assets. Over the short term, I think I do think that this sort of tariff tantrum is a net short-term negative for the global economy. I don't know how you look at it any other way. You're like, all the king's horses and all the king's men can't necessarily put Humpty Dumpty together again once we've broken the trust of, how the world is operated. At least it will take some time. So I do think there is a short-term economic headwind. I do think the market is sort of waiting for the Fed put or someone to push the big red button to save us from this headwind. I actually do think that will happen. And when it does, I think assets will rip substantially higher. But, I don't think we can be completely sanguine about it. I think the world is in a more difficult economic position than it was a few months ago. And we have a lot of uncertainty to work through. And that is a headwind to risk markets until that big red button gets pushed, which I do think will eventually happen. One of the strongest correlations that Bitcoin has had over its entire history has been a negative relationship with the dollar. Weak dollar is good for Bitcoin. It's literally denominated in dollars, so it's almost axiomatically good for Bitcoin. And more broadly, it's just generally good. It's just a weakening of confidence in the US dollar, and all of that attributes back into positive for Bitcoin. I've said this before, there are extraordinary statements coming out of the White House, and particularly from the Council of Economic Advisors, about what they want to happen with the dollar. They aggressively want the dollar to be substantially lower, just as much, I think, as they want the 10-year to be substantially lower, and just as much as they want to reset trade. It's sort of the trifecta that they're aiming at. And, one reasonable assumption is what Trump wants, he tends to get through one way or the other. And I think we can expect dollar lower to be a relatively dominant paradigm over the next 2 years. Everything that's happening from this tariff perspective, everything that's happening from sort of confidence in the US suggests to me that we're going to get that. And so that historically has been extremely positive for Bitcoin. And I don't see why it wouldn't be extremely positive for Bitcoin this time around. I count it as another tailwind behind this long-term bull market. I think in a level macro environment, there's a fundamental mismatch between demand and supply in Bitcoin. New supply of Bitcoin is 165,000 Bitcoin. Last year, ETFs bought 500,000 Bitcoin. Corporations bought 350,000 Bitcoin. I think governments may buy hundreds of thousands of Bitcoin this year. So there is much more sort of structural demand for Bitcoin than there is new supply. And what that means is existing holders have to sell. We saw existing holders sell at 72,000 from March to November before we ripped up to 100,000. The reason I say 200,000 and not like 162,351 is because I think that's the next level at which existing holders will be willing to sell, because they're behaviorally driven humans, and that's a nice round number. So I think once the macro market levels out, this fundamental demand supply mismatch will force Bitcoin up and up and up till we shake Bitcoin loose from existing holders. Maybe they'll shake it loose at 150K, but I'm not sure. I think it could get all the way up to 200K by the end of this year, because there is this just dramatic supply demand mismatch in the market. I think people will want stablecoins. I'm extraordinarily bullish on stablecoins. They are a killer app. If you're in a challenged economy and you don't have significant wealth, you can't handle the volatility of Bitcoin, even if it's up over time. Stablecoins are just an extraordinary killer app. I think there'll be trillions of dollars of stablecoins in the next couple of years. In terms of who are the buyers of Bitcoin, I really think there are three, but I think they're all significant. I think governments will buy hundreds of thousands of Bitcoin over the next year. I think corporations, which bought 350,000 Bitcoin last year, when from a FASB accounting perspective, they could only mark it down on their books and it could only hurt earnings. And that changed January 1st. I think they will buy more Bitcoin this year than they bought last year. And I think hundreds of companies will do it. And then I think institutional investors are recognizing that Bitcoin is now part of the global capital markets. And if you're not at 1% Bitcoin, you're effectively short against the global capital market benchmark. And so I think there are, hundreds of billions of dollars of investment that need to come into Bitcoin just to level up to flat. I continue to think 95% of all Bitcoin is owned by someone, and 95% of the people who have to own Bitcoin don't yet own any. And the cross of those two numbers just is this fundamental source of demand. So governments, corporations, and institutions, I think those are multi-year trends, and I don't see anything slowing that down.
Bitcoin's current market behavior presents a fascinating study in maturation as the cryptocurrency transitions between market regimes. The price action has analysts divided, with 10x Research's Marcus Thielen forecasting extended consolidation between $73,000 to $94,000 based on technical indicators suggesting late-cycle dynamics rather than early bull market conditions. This outlook aligns with Bitwise's Matt Hougan's observations about Bitcoin's evolving market structure and growing institutional participation. The rally's composition reveals significant changes, driven not by retail speculation, but by long-term holders adopting buy-and-hold strategies, reflecting the institutional behavior Hougan has consistently highlighted. The market now demands more sophisticated analysis as complex financial instruments and nuanced price action replace the simple parabolic moves of previous cycles. Price movements increasingly respond to macroeconomic factors and institutional flows rather than retail sentiment, validating Hougan's framework for evaluating Bitcoin through traditional financial lenses. The potential consolidation phase mirrors what Hougan describes as necessary digestion periods in Bitcoin's path to mainstream adoption. While historical patterns from 2024's election year provide context, today's fundamentally different market structure, with its institutional participation and developed financial infrastructure, suggests direct comparisons may be misleading. This transitional period creates both challenges and opportunities for investors. The growing divergence between short-term technical signals and long-term fundamental adoption metrics requires a more nuanced approach to market analysis. As Bitcoin continues its evolution from speculative asset to institutional-grade holding, understanding these structural changes becomes crucial for navigating the current environment and anticipating future price movements. The market's behavior confirms we've entered a new era of cryptocurrency investing, one that rewards sophisticated analysis and patience over the speculative frenzy of previous cycles. As we wrap up, do you think Bitcoin's potential to reach $200,000 by 2025 is realistic? Why or why not? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.